Nick, I'm going to get back to you here on your housing, CRA, Barney Frank, Fannie Freddie, Ginny posting. Couple of disclaimers. Number one, I'm not a big fan of Barney Frank, and I haven't been for a very, very long time. Okay, not that he hasn't done some good things, by the way. Second, and much more important, is the CRA. I'm not only a CRA supporter. I was, one of the leaders of the CRA in Vermont. Spent years, working with the CRA association there. Starting off, starting off trying to prevent the interstate banking bill from passing, and we prevented it for a few years, very fortunately. But eventually, that promise of the hundreds of jobs that were going to come when we provided the, home base for the reinsurance industry in the Northeast and Vermont, won out, and they did pass interstate banking, and basically, that has interstate banking is basically what has led to the conglomeration of the banking industry. That's how we got to too big to fail. Okay, it was by design. Okay, by plan. People ought to go back and take a look at that. But also, we worked to get whatever protections that we could for the low-income people in Vermont within the CRA program. So we think, and I'm proud of the work that we've done there. I have make no apologies whatsoever for the work that was done by the CRA. Still very close to the people that worked in the CRA, and a lot of them are monetary reform people. Excuse me. Um, CRA. Let's talk about what it was. I mean, it was based on a finding that said that the banks who get a license to provide the credit needs to communities were not meeting the credit needs of low to moderate income communities. We called it redlining, but redlining was, just one of the things that you could do to prove it. Um, and what does that mean when the credit needs of the community, right? I mean, we talk about it like as if it only means that there was no money going for mortgages, which it was true, and that's why it's all rental housing. But it's much more important than that because meeting the credit needs of the community is a means of providing capital into the community, money, access to the money system. Remember that? The monetary system, access to the money system. If you don't have access to the money system, your community is going downhill. Okay, you are on a slide, and that's what's happening in all of these cities and towns and neighborhoods and barrios and ghettos and things that we have today. There's no money going in there. Okay, why isn't there any money? There's more money to be made elsewhere. Okay, as simple as that. Rate of return. Follow the rate of return. That's where the money system goes. Um, so yeah, so we did that. We got, I think, in Vermont the best uh, housing finance agency, the best group cooperation between bankers and reformers and people represent low moderate income people. We got the Housing Conservation Trust. We got a lot of things that make a lot of sense if you're worried about there not being enough. And you're going to find that Vermont does very well in the housing crisis because of the work of the CRA and others. Okay, because it was clearly partnership. Um, so having said that, that's where I am on CRA. Okay, no qualms saying it was essential and the right thing to do, and it will be proven to be the right thing to do. Now, onto the financial crisis that's being blamed on the CRA. First of all, go to the Dallas Fed report, which actually took a look at the official report took a look at any relationship between CRA activity and the subprime crisis. Why? Because they happen to both relate to the subprime mortgages happen to relate to lower mod income housing. Um, and none. There's no connection at all. But if you want to even go further, go into the research papers that have been done by the economist staff of the Dallas Fed. Okay, much more telling there in terms of what they've done with the data. So that's not real. Okay, um, and anybody that says it's real is to me scapegoating. They're looking for an easy explanation out. So having said that, and again, not being a friend of Barney Frank's, being a huge critic of Barney Frank, um, I want to take a look at the financial crisis and the housing part of the financial crisis. Let's take a look at it, what it was: a huge monetary expansion. Okay, now the question becomes whether or not, when that huge monetary expansion is needed in the money system, in the fractional reserve debt money system, needed to continue to have money being created so that we can continue to make the debt service payments on the money that's already out there. That's the driving force, Nick. Okay? That's the driving force. That's the thing that keeps the debt money system, fractional reserve banking going. Okay? That's the imperative, the built-in imperative. With creation of all that huge amount of money, we needed to we needed to make ways to get that money down into the economy so that we could actually make money while it was happening. And one way was in the housing sector, and in fact, it was one of the major ways for good reason. And and in the housing sector, what actually manifests itself was a huge asset inflation. They call appreciation, asset inflation. All of a sudden, houses were worth twice as much as they used to be, 3 times as much as they used to be in some markets, the ones that are really off the edge now. And you have to say to yourself, if you really understand housing, okay, the thing that makes housing work, I think I've said this before, Nick, the thing that makes housing work is it's affordable. You can drive up the value of any asset, but if the people can't afford it, by 30 to 35% of their income. So if the average wage is not going up, okay? If the average wage is not going up, the average price of housing is not going up. Okay? It has to be driven. It has to be really demanded. Okay? That's the thing that actually soundly drives up the price of housing. So if wages aren't going up, and they're not going up, and why aren't they going up? They're not going up because the money system doesn't go to where it's needed to provide the needs, to provide the means of exchange, to have a sound economy working back and forth in terms of supply and demand. The money system doesn't work that way, Nick. The money system goes to rate of return, to return on investment, to return on investment, really. Okay. Now, is there a greater return on investment by putting some money down into the low mod income communities, so that they can actually start to become vibrant, so that they can actually, feel like it's worth it to get up there and go to work and, and get a job and pay your dues and get an education and all that kind of stuff that we know is needed? No, money goes to its return on investment. So where does it go? Well, they made sure that a bunch of it went into housing, because housing asset inflation provides a basis for mortgages. You drive up the prices of mortgages, you drive up the levels of mortgages, you take those mortgages and you create asset-backed securities or mortgage-backed securities out of them, and you take them out of the commercial banking sector where the mortgages are made, you package them up and you ship them over to those guys over there, the ones that have no regulation, the ones that can take those asset mortgage-backed securities, cut them and dice them, make something that you can take a bet on, something that you can take a nice bet on, Nick. Okay, how about a nice future rate? How about an interest rate swap? How about a derivative? How about a hedge on the? Now you create all of this BS financial stuff. Okay, that's what the financial crisis is all about. It's not about housing. It's not about subprime lending. It's not about community reinvestment. It's about the money system. And we can sit around out here in the trenches and in the ditches and argue about this forever. But ultimately, Nick, we got to fix the money system. It's the money system that caused this. The failure of the debt money system of fractional reserve banking. Back to the same old story. We don't fix the money system, we don't fix anything, Nick. Thanks.